In this video, I want to talk about the number one mindset shift to build long-term investing confidence. If you're watching this video, it means you are a stock picker. You pick stocks, you invest in stocks, and you want to beat the market, to outperform the market. But to outperform the market, you need confidence, right? To invest in the good companies, to hold when you have a market crash, to double down when the stock is cheap. This video will help you. It's the number one mindset shift that I teach my students, and you can get it for free on YouTube like this. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I learned this number one mindset shift the hard way, because the first year of investing, of stock picking, I lost 30%. Minus 30% during your first year of investing is not fun. But you know what? It's fixable. And what is great with investing is that you can learn from your mistake and never make them again. And if you learn things right, if you have a clear framework, you have a clear checklist, you can compound on this knowledge. So this is great. Now, even if you consider the minus 30% in the first year, I have averaged 24-25% per year, which is amazing. So I hope it will continue and I can compound on this knowledge. And the first point I want to make is to stop focusing on short-term stock movements. A lot of people right now joined the stock market. They are picking stocks and they look at the market every day, every hour. Question for you: how many times do you check your portfolio per day? Per day, per week, per month? The answer should be, I would say it depends on everybody, right? Depending on your age. But a good way to be a long-term investor, to build long-term confidence, would be to look less frequently your stock prices, your portfolio. It will not help you if you look at your stocks very frequently. Let me put it this way. Confidence doesn't come from predicting the next 3 months. It comes from trusting the next 10 years. If you look at your stock prices every day, you monitor the stock prices, you have a judgment if something goes up 10% in 1 week, or if something goes down 10% in 1 week, you try to overanalyze things. In the short term, stock prices are irrelevant. If you don't have any piece of news relating to this industry or to this specific company, stock prices tell you nothing. This is a different game, right? I'm not telling you you can't make money in the short term. This is a job for the short-term investor, for the traders. This is great, but this is a different game. This channel is not about trading. This channel is not about stock options. This channel is not about speculation. This YouTube channel is about building long-term wealth, picking great stocks for the long term, right? If you are stressing, if you have anxiety looking at your stock prices, well, having this mindset shift will help you. And I hope I learned this sooner. I would have avoided a minus 30%, a big loss during the first year. Actually, how can you look at your screen less? Well, a good way to be more confident about your portfolio, about your stocks, is to increase the quality of your holding. I know it's easier said than done, but why don't you look at your portfolio right now and you can pick the worst quality company you have in your portfolio and ask yourself, why do you own it? If you increase the level of your quality of your portfolio, I mean, the ultimate quality should be Visa or MasterCard, right? Or Berkshire Hathaway or Amazon. You are talking about the ultimate quality company that will not go bankrupt in the next 5 years. Companies that you can let live, the companies that you can never monitor, you know they will be fine. You know Visa will be fine. You know Berkshire Hathaway will be fine. You know Amazon will continue to grow. This is a stress-free portfolio to have. So you have what I call stress-free stocks. Never monitor stocks. Literally, you buy them and you let them run. Anything can happen, but in the next 5 years, you know that the stock prices will go up. the stock prices will go up, the businesses will increase the revenue, the margins, the earnings, the cash flows, etc. So if you are stressing, if you have anxiety with your portfolio right now, a good shift in your allocation of capital would be to increase the quality of your holding and having more stress-free investments in your portfolio. This is what I have been doing with my portfolio, especially in 2025. As the market is getting more expensive, you have a new US administration that is more aggressive, you still want to be invested, right? Invested in the US, right? But maybe a little bit more defensive. So I bought, even recently, I bought more stress-free stocks in my portfolio. Just in case we have a market drawdown, a market crash, I know that these companies will not fail. These companies will not go bankrupt. And guess what? I'm still outperforming the market on a year-to-date basis right now in 2025, so far outperforming the market, even with these stress-free investments. So you can still continue to beat the market, even if you play safe, because I know what I'm doing. I'm only buying quality companies, right? And you increase the overall level of quality of your stocks.
By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video.
Next point, shift your mindset from buying stocks to owning businesses. You're not buying lottery tickets. Behind every stock, there is a company with real life employees, a product, a service, revenue, margin, profitability, reinvestment process, expansion process, acquisitions. And if you consider stocks like a real partial ownership of a business, you have understood everything. Not a lot of people have this mindset of literally buying a small portion of a company. If I buy MasterCard shares, I am an owner of MasterCard, which gives me a lot of joy actually. I can monitor on a quarterly basis or an annual basis what the business has been doing. And if you listen to the CEO, you're listening to a partner because you are owners. Both of you are owners, partners of MasterCard. So it's a great privilege to be in this situation, and it gives me a lot of joy to see stocks as partial ownership of businesses. And I guarantee you that if you stop monitoring the stock prices very frequently on a daily basis, if you don't consider stocks like lottery tickets, you will reduce the anxiety you have in the market because you will know what you own. Again, I'm asking you, can you please check your portfolio right now? And do you share the same mindset with all your picks? If you share the same mentality, owner, operator mindset, this is great. Congratulations. But be honest with yourself. If you are looking at your portfolio right now and you look at the stock prices, it goes up, it goes down, and you're stressing because of what caused the price to change rapidly, and you think of selling just because it goes up massively, this is pure lottery tickets. You are not a trader, you are an investor. I mean, you are watching this channel, right? So I hope you want to invest for the long term. If you don't want to invest for the long term, you have other channels that will do the work way better. So being a part owner of a real growing company is a great mindset shift to have. You will have less anxiety, and it will again add an additional threshold in your framework of buying a company. Sometimes you will buy a stock, you will buy a company, and after buying it, you will maybe like less the idea. Or finally you say, I don't understand this business model after all. It's fine. Don't hesitate to sell a position if you don't really understand the business model. You are an owner after all. You can sell your position, your allocation, to someone who is a willing buyer of its shares. That's part of the public markets. Life is good. You can move on. If you only fill your portfolio with companies that you have a real knowledge on inside your circle of competence, that you feel privileged to be an owner, this is great. You can hold for many years. And actually having this mindset, this mentality of being an owner gives you this long-term mentality. you don't want to trade stocks and sell in 6 months, you are much more comfortable buying and holding for 5 years, for 10 years, right? I first bought my Meta Platforms shares in 2018. Now we are in 2025, so it's been 7 years, something like this. 7 years of ownership. And I don't want to sell. I'm part of the journey now. I follow what Mark Zuckerberg is doing, Instagram, Facebook. As a user, I love it, and I want the company to continue to grow. So it's much more fulfilling, I think, to think like an owner. You have less anxiety, and it's more fun. Actually, it's more fun to just follow the news. And I'm telling you, after 7-8 years of ownership, I've seen everything for Meta Platforms. We had the Cambridge Analytica scandal in 2018. We had the COVID and the boom, the expansion. And then we have the complete collapse of the stock in 2022. What did Mark Zuckerberg do? People that went through this 2022 crash, they know how it feels to have a stock crash 70%. They know how Mark Zuckerberg reacted. They know if it was good, it was bad, the rebranding of the company from Facebook to Meta Platforms. I mean, they changed their name, right? It's not very frequent. You have companies that completely change their mindset. And then you go back to their roots of being efficient, lean, etc. Now, new investors that are starting to buy Meta Platforms now in 2025, they have not experienced what us long-term investors have experienced. So we have a better understanding about the business, and when there is a next crash, it will happen, guys. We will have a next market correction. It happens every time, every couple of quarters, stocks go down, right? And then they recover, it goes down, recover, etc. When there is a next market crash, people will be panicking, and long-term investors will be okay. This is not the first time we have this, right? So it gives you a lot of confidence in your stock pick to be a long-term owner. So it's a self-reinforcing cycle. It's a virtuous cycle to have this mindset shift, because you increase the quality of the companies, you hold for the long term, and you are much more prepared when stocks go down. So actually, this mindset shift to build investing confidence is great. It's a virtuous cycle, and it gets better over time. This is what I teach all my students. I remember last week, we talked exactly about this problem. How can, I won't name his name for privacy reasons, how can I get more confidence picking great stocks? How can you build the knowledge? It's all about investing inside your circle of competence, right? And if you don't know where to start, how to have a clear framework, as always, you have the first link in my description to book a call directly with me, and we'll see if I can help you. And if I can help you, we are happy to work together. And you can join the coaching program to improve your investing confidence. I see many people that lack this confidence, so they trade stocks, and after this, they are very sad because they have losses, they don't know what to do, and sometimes they are sat in cash. You are sitting with your cash. I had a call a couple of weeks ago with somebody. The majority of the portfolio was sat in cash, sitting in cash for so many years. Think of this. What is your cost of inaction? Because you were too scared of investing in quality companies and holding for the long term. If most of your portfolio is sitting with cash, there is a problem. There is a problem. Even if you are more than 60 years old, you want to increase your cash exposure, but the majority of your holdings in cash, and this person was quite sad about it. Let me put it this way, quite sad. He wanted to invest more. He wanted to get more confidence. Okay? What do you think of this? What is your cost of inaction? And for example, if you have $1 million sitting in cash and you want to make 15% per year, the cost of not making 15% per year is costing you 15% of $1 million. So $150,000. Every year is costing you $150,000. This is your cost of inaction for 1 year. For 2 years, $300K. For 2 years, $300K. For 3 years, $450K. And it compounds over time. So the more your weight, the more your weight, not having a clear framework, the costlier it will get for you. Okay, pretty important to understand what you own and to focus on businesses. Third point, accept that volatility is normal. As I told you, this is a self-reinforcing cycle, a virtuous cycle. You know, for Meta platforms, this is a great example because it went down a lot in 2022. It was a massive crash and then rebounded beautifully. Accept that volatility is normal, not a reason to panic. If you own great businesses, short-term drops are opportunities, not threats. Guess what I did when Meta platforms dropped in 2022? I bought heavily and it dropped more. I bought again. You can continue to buy as it goes down. The lowest point I bought was in the 100, 140, 150. It continued to drop after this, but I did not panic. I knew exactly what the business would look like in the next 5 years. So I think having this mentality is great because when you have stock crashes, you know exactly what to do. There is no second guessing. Now we are in 2025. A lot of people have this problem. They have too much information. They have too much noise. They don't know whom to trust. They don't know what to follow. Well, if you have a clear framework, it can help. And this is what I've been working with my clients so far. And having a clear framework, knowing what to do when stock crashes is a great tool. This is a great way to live your life without much anxiety. You know exactly what to do. Next point, trust your research. Oh, this is really important. Trust your research, not the headlines. Confidence comes from knowing why you bought a stock and being able to explain it clearly. Okay, 2 points here. One, if you can't explain what the business does to a child in 1 minute, it means you don't understand enough. Okay? You have to be able to pitch your investment idea to a child in very simple words with your own words, and the child should understand. Okay? First point. Secondly, if you panic when you have a scary headlines and you're not sure, it means you don't understand the company. The level of analysis we do on our coaching program is complete. And it's enough to have conviction. When you do the research on your company, you do the due diligence, you know exactly what are the key points, what are the growth opportunities, what are the threats, you know everything. You know the management team, okay, the potential risk, okay. When there is a headline, what is great is we don't panic because we can compare this scary headline to our analysis. Does it match? Does it make sense? Sometimes headlines are wrong. Fun fact, welcome to the investing world. The newspaper industry wants your attention. So headlines will be scary. And if you trusted your gut and you were scared at every headline, you would have not been invested and you would have a huge cost of inaction. How many people lost money doing this? They were constantly waiting for a correction to happen and the major crash never happened. All the doomsayers you see on the internet saying, oh, stocks are expensive, let's stay on cash, let's stay in cash. They have been on the sidelines for 10 years and they've been missing out on the market for 10 years. This is not how I want to invest. I recently watched an interview from Steve Eisman and actually I can show it to you. This is somebody, maybe you know him from the movie The Big Short. Steve Carell plays his role. He predicted the major crash of 2008, right? So it's a big deal. You could say, oh, this guy is a doomsayer. Not at all. Not at all. And in this video, Steve Eisman answers your investing questions. Look at what he says. Let me put this question. What does he think of holding cash? Because the market is expensive. Because Warren Buffett is building up cash. So what does he thinks about staying in cash while the market is overvalued?
Berkshire is holding $348 billion in cash. It's a lot of money. And I'm aware of successful value investors holding 30% in cash when markets are frothy. What are your thoughts on holding cash in general, and especially now as markets are at record highs? That is a very intriguing question. And I've actually changed my mind about it. 10 years ago, I was not as confident in the US economy as I am now. So when the market would have a correction, as it always does, I'd get nervous and raise some cash. But I learned the hard way that it is very difficult psychologically to get back in. You've just sold, and then the market turns. Is it a fake out or is it real? You torture yourself. You literally torture yourself. And in my case, I was always late to add back to investments. My opinion today is that because the US economy is so dynamic, it's best for most people to just stay fully invested. That is what I have done for several years. Now, it's not for everybody. Some people like to always have cash on the sidelines, and if that makes you more comfortable to invest for the long term, then that's fine too. Question 9.
Okay, so yes, holding cash feels safe, but it is costing you, I would say, millions in cost of inaction. The compounded cost of staying in cash is unbelievable, and you will have scary headlines. Even if you look at the past few years, right? We had COVID, scary headlines. We have war in Europe, scary headlines. You have US bombing Iran, scary headline. You have many things happening at the same time. Tariffs, scary headlines. If you had trusted the scary headlines, you would be sitting in cash and you would have underperformed the market and all your gains would have evaporated. No gains whatsoever. You stand in cash. And now the interest rates are about to go down. So the yield on cash will go down. So your cash will get you even less capital. The gains will be minimal. The only way to hedge yourself against inflation intelligently, if you want to focus on public markets, is through stocks. Stocks, companies with pricing power, quality companies that can increase their prices. Okay? So what we work on the coaching program is we do our own analysis to build confidence, due diligence. So we know when the headlines are wrong. We know when there is something to monitor. We can trust our analysis because we've done the work before. And this is the reason why we outperform. Again, if you want to join us, you know where to click. Next point, measure your success in decades, not days. Sometimes I publish a video about a specific stock, and after a few days, the stock goes up or goes down, and people ask me to comment on the decline or the stock that goes up. Come on, guys, it's been a few days. I will not comment on market fluctuations on a day-to-day basis. This has never been the goal of this YouTube channel, and I don't think I want to make these kind of videos. A stock going up or down 5 or 10% in 1 week doesn't influence my thinking at all. Actually, if I am buying something and a stock goes down massively, I'm a happy buyer because I can buy on a cheaper basis, okay? The only investors who constantly beat the market are the ones who think long-term and act accordingly. Again, this is a key lesson. And that's it for my points. If you analyze all these points and if you implement all these points, you can outperform the market. It's a massive mindset shift that will allow you to be stress-free, reduce your anxiety, pick quality stocks, monitor them, and invest for the long term with confidence.
If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.